What's the state of the Chinese economy? On Monday, China released its first quarter economic report for the year, showing GDP growth by 4.8% year on year, beating expectations. Foreign trade of goods also rose at 11%, and the CPI, a major gauge of inflation, rose slightly. What do these numbers tell us about the health of the Chinese economy, especially under the strict measures to suppress COVID-19 cases? How has the war in Ukraine impacted China's economy, and how will things go from here? To help answer these questions, I'm pleased to be joined from Beijing by Professor Zhu Ning, Deputy Dean of the Shanghai Advanced Institute of Finance at Shanghai Jiao Tong University, and from New York, Professor Max Wolff, Chief Executive Officer of Systemic Ventures and Professor at New School University, a research university in New York with progressive thinkers. Gentlemen, welcome to The Point. So first of all, Professor Zhu, let me go to you. China's first quarter economic growth saw 4.8% year-on-year increase. That's said to be beating all expectations. But the consumer price index, which is indicative of inflation, rose at 1.1%. How do you look at the combination of these numbers?
Well, I think this is a very encouraging set of statistics. The economic growth number is much stronger than originally expected. And also, I think we have to take into consideration that this impressive economic growth took place under the great uncertainty of geopolitical and the fight against COVID within China. And quite in contrast with what is happening in the rest of the world, the inflation in China right now is quite modest and contained. So this is a very nice combination of statistics, which indicates both robust economic recovery and quite well-controlled pace of price increase, which is very good for the quality of life and also for setting proper expectations for the coming months of the year.
Professor Zhu, I do think a lot of people would ask this question. Look, these numbers come from the Chinese National Bureau of Statistics, especially this CPI, which indicates inflation rose by only 1.1%, whereas you have the US CPI number, for instance, for the first quarter was 8.5%, the fastest inflation rate, the highest inflation rate in 41 years for Singapore is also a 4% rise, and for European Union, annual inflation rate was 6.2% in February, as also up from the number in January. So how credible do you think this 1.1% CPI increase is, and how come that China is able to keep prices under control in such an effective manner?
Well, let me try to answer the second question first. Well, I think the economic recovery of China in the past couple of years is somewhat misaligned with the rest of the the world, given the various approach to how to contain and fight against the COVID epidemics. So, in some sense, I think China's economic growth was somewhat slowing down from the top speed at the beginning of last year. So, I think that is helping China's inflation to be more modest compared to the rest of the world, which is experiencing very high inflation, but at the same time, their economy is also experiencing very strong rebound from the low point of the COVID. So, and
In terms of the credibility of the number, the
regarding
one,
the
yeah,
reliability of the data, I
yes,
think this is something that people ro-
right.
have been speculating about. I think there are a couple of things which people are paying attention to. One is I think China's way of compiling CPI is somewhat opaque compared to the more transparent gauges used in some other countries. The second, I think, sometime in last month, the inspection by the Commission of Discipline Inspection of the Chinese Communist Party is also raising some concerns regarding the reliability of the general statistics number from the National Bureau of Statistics.
So how much can we trust in that 1.1% CPI number then, Professor Zhu? Can we say still with relative confidence that inflation is still relatively low in China?
I think if you are looking at the data and also if you're asking around regarding the feeling of the everyday life of local residents, I think you would still reach the same conclusion that the inflation is at a much more controlled pace compared to, let's say, the US, which is really breaking neck in certain areas.
All right. Professor Wolff, let me get your perspective. How do you look at the numbers that I've just mentioned and the comparison, if we can, of inflation numbers in the United States, in other parts of Asia, or in Europe vis-a-vis China?
So it's a great question. I mean, clearly these are the lower numbers we've seen from a major global economy by a major factor, right? So we're 7 times those numbers in the recent data here, although it's very uneven. So here it's very driven by food and motor fuels and cars, which are in the 40% year over year growth, like so incredible growth rates in terms of price. So it's a few items that have really created these enormous numbers in a lot of economies. The other thing to keep in mind is most of that is pricing power by the companies because there's no demand growth in the US. So things are going for 40% more than they were a year ago, but they're actually selling less total units. So that's about pricing power. And if you can exert a little more control to prevent people from taking fairly aggressive advantage of disrupted markets and price format, then you can keep the inflation somewhat under control. And even if the numbers, for the year turn out to be a bit higher, it still will be a bit of a success to be so far below some of the other major economies in terms of the price growth.
Some of the more recent developments in the news, for instance, the lockdown in Shanghai, which started at the end of March, and also the war in Ukraine, which started in the end of February. These, I guess, would take time to factor into China's economic performance. But Professor Zhu, what are your predictions of how the second quarter might look like based on what we have now?
I'm afraid I think the economic growth of the second quarter of this year will heavily depend on China's approach to contain COVID at the moment and in the coming months. We have already been seeing reports about how the disruption has already been taking place as a result of the lockdown, not just in Shanghai, but in various cities of the country. And also, we have to keep in mind that Shanghai is China's busiest port, which is going to affect China's trade with other countries to a greater extent. So I think those are all very serious considerations that we have to account for. And that being said, I mean the government is trying very hard to use the zero COVID policy, and then I think this is a question which people have been speculating upon and debating about whether this policy will persist as there are more and more cities experiencing similar situations throughout the country. So if I think we are going to continue with the current approach in Shanghai for another month or so, I think we're going to see a very sharp drop in the GDP growth in the second quarter of this year.
Professor Wolff, let me get your perspective. Do you think it is worth it, from your observation in the United States, or according to the practice in the United States, do you think it is worth it to sacrifice the economy so much in terms of suppressing COVID numbers? What has been the lessons or experience in the United States?
Yeah, so I would say the Chinese approach and the American approach is kind of bookends. The American approach has unfortunately been to continue to say we've vanquished COVID and we can go back to normal when we can't. And then we have variant outbreaks that are massive and we've mismanaged them pretty terribly, which is why we've lost 1 million of our fellow citizens here. On the other sort of extreme is to try to have no COVID when the variance and the contagion factor is pretty high. And it's certainly clear that the Chinese management system has been more effective, fewer deaths and possibly less dislocation. But the United States is spreading out the death and economic damage over years, and the Chinese management system has relatively long periods of stability with very pronounced lockdowns. So I think it's a little bit early to see who has the best economic growth, but part of what a government does too is manage keeping the faith of its citizens and keeping them alive. And there, unfortunately, I think the United States has not done a particularly good job.
Professor Zhu, however, people would ask the question here in China as well, is it worth it to sacrifice so much in such intensive period of time? Does the math make it worthwhile in order to have overall long-term growth that we, lock down cities like that? Isn't the price would the price be a little bit too high, Professor Zhu?
Well, I think as an economist, we always debate about what are the right assumptions and then what are the perspectives about decision making. So I think to answer your question, Xin, it's really about, well, what do we care more about? And do we care about the livelihood or the safety of those who contracted COVID? Or do we care about other fellow citizens who might suffer from other types of diseases? Or do we care about the economy or the economic growth more than just the public health consideration? So I think it really depends on what are the motivation or the objective of the decision making. So that being said, I think as an economist, I'm probably being partial here. I am concerned with the current approach to COVID might cast a very heavy question mark to the economy, not just for the second quarter. If we're going to continue this approach for a very extended period of time, we might see the entire year's 5.5 economic growth number may be cast in jeopardy by itself.
Well, we definitely have to balance as we go along. Finally, Professor Wolff, if I can, 20 seconds if you can, how do you think China's performance could impact the growth in other part of the world?
Yeah, so most of the world is used to getting a sort of deflationary impact from China and a growth signal from China because of the growth and the pushing down of price of efficiencies in China. I don't think that's going to happen this year, and that's unfortunate because the world needs it. Because as much as China has challenges, the rest of the world looks like it's in pretty bad shape, led by probably food and fuel prices, not only but partially because of the war between Ukraine and Russia.
Thank you so much. We'll keep talk about the economy and, of course, keep a close watch on the situation. Many thanks, Professor Zhu Ning from Shanghai Jiao Tong University and Professor Max Wolff, Chief Executive Officer of Systematic Ventures and Professor at New School University.